Alexis Christoforous.
Let's kick things off with Adobe because it's got some openings in its C-suite. Its chief financial officer is leaving the company just months after its CEO said he was stepping down. That stock is down about 9%. It is down 37% so far this year, now hovering near its lowest level in about 7 years. But here's the deal. Adobe's quarterly results and outlook, they were better than expected. But this announcement that the CFO is leaving on the heels of the CEO leaving has, overshadowed things. For a while now, Wall Street has been concerned about Adobe's ability to do its business in the face of AI disruption. Adobe Photoshop, you must be familiar with that, right? That's the software that a lot of pros use. So they're saying that it's easy for AI to come in there and sort of mimic what Adobe is doing. So now they're looking for new leaders at the top, and at least two firms are lowering their price target this morning on Adobe, including BMO Capital from $285 to $230 a share.
This is just like the whole innovation thing.
It's coming.
It folds into the SpaceX worries as well. I don't know.
Perfect.
Okay, next.
Lennar, home builder, third quarter forecast for new orders and deliveries below expectations. On the earnings call, the CEO said headwinds like elevated mortgage rates, inflation, cautious consumers, all keeping a lot of the homeowners on the sideline. So they're trimming their full year delivery forecast. And here's the deal. There's really sort of the tale of two home builders out there, because Lennar's average home price sale is around $370,000 with incentives. Actually, incentives have been running about 14%, and it's all due to mortgage buy downs at Lennar. But then you've got Toll Brothers, where the average price that they sell a home at tops $1 million. They're seeing order growth. They're seeing solid gross margins. And get this, nearly half of the 20 analysts that Bloomberg tracks have sell ratings on Lennar, while Toll Brothers has 1 out of 20. So I think that tells you the story right there.
6.57 in the 30-year Paul. It's really not broken out of the range.
It hasn't.
To be fair, it's gone from 8% down to 6.57. I need to see a little more like over 7% before I can say OMG rates.
But people aren't comfortable with these rates here. So there you go. What else you got?
I have got, we've got like a cluster of stocks because we know space is taking over Wall Street today with the SpaceX IPO. So as a result, we're seeing other space-related stocks rallying. EchoStar is higher. Investors see the satellite maker as a proxy for SpaceX because it reached a deal last year to sell Musk's company Spectrum in return for about 2% of SpaceX stock. So EchoStar has a lot to gain today. Rocket Lab higher as well. By the way, it's going to be, I looked a little deeper. It's not all about SpaceX. Rocket Lab's going to be joining the NASDAQ 100 later this month. And also a satellite maker, AST Space Mobile, Firefly Aerospace, all higher because of this.
So anything with the name space in it's going to do
It's
well
a pretty good bet, at least today.
Here's something interesting, guys. You put up SpaceX and you use the BQ function. It gives you a lot of information, including what does BI say the comps are for SpaceX. And here's what they say. It's a couple of satellite companies, SiriusXM and Space Exploration. It's an EchoStar. It's a couple of cable television companies, telecom companies, Charter and Comcast. Also some defense contractors like General Dynamics.
Right.